I'm anonymous, and I am going to give you a little spiel today on the streetTRACKS, what's it called? The streetTRACKS Gold ETF, otherwise known as the GLD. That's its ticker symbol. This is an exchange-traded fund, and it purports to hold gold. So before I start talking about the structure of this thing, I'm just going to point out to you that a fact that you might not be aware of. And that is, if you have $100 in your pocket, and you go down to your bank, and you deposit it into your account with the bank, you no longer own that $100. This is a very important concept. The bank owes you the $100. They can do with it what they want. And this is the part that people find disconcerting. The bank owns that $100. They owe it to you. You don't own the $100. They do. We're going to use that in a couple of minutes here. So I'm going to describe how the shares of the GLD come to be. We have a thing called an authorized participant, which is typically a stockbroker at one of the Wall Street big banks. And this authorized participant is, what he does is he goes and buys 10,000 ounces worth of unallocated gold, 10,000 ounces of unallocated gold from one of the bullion banks on Wall Street, like JP Morgan or Goldman Sachs or Scotia. And so they pay the market price, the then market price for unallocated ounces, and then the bullion bank will give them a piece of paper that evidences 10,000 ounces of unallocated gold. Okay. Well, this authorized participant, stockbroker, will take this to the GLD, the trust itself, and say, I want a basket. And what a basket is, it's 1,000 ounces of gold. 10,000 ounces of gold. I'm going to have to check these numbers later. And they will issue this authorized participant, stockbroker guy, 100,000 shares of the GLD. Okay, well then he can then sell those shares to his clients or just on the open market. And hopefully he will be doing that, like, for his sake, at a higher price than he paid when he bought the unallocated ounces from the bullion bank. Okay, so the shares, again, they're created by the GLD trust in this basket of shares, and so the authorized participant gives the unallocated ounces to the trust, and the trust gives him or her the 100,000 shares. Each share is worth 1/10 of an ounce of gold. Okay, and so then he sells them on the open market. Okay. Now, what happens to this unallocated ounces? It's a piece of paper that he has given the trust, and you wonder what happens now. Well, we've seen pictures in the paper and on the GLD website that they show there's stacks of gold. You know, there's big piles and piles of these gold bars in the Bank of England vault over there in London. And I've heard presidents of mining companies say, I've been to the vault in England and I've seen these skids of gold bars, so I know they're there. Well, he was misled. I'm going to explain to you, because I did something that not many people do, and that is I read the prospectus. Okay? The GLD trust has two accounts with HSBC, who is the custodian of the GLD. Okay? So I'm going to draw some boxes on this whiteboard here. So we'll call this, well, here's the trust. This is the GLD. It's a trust. We have our authorized participant down here. And, you know, I suppose we can put the shares over here in the public, you know, they're there. Over here is a bullion bank where the authorized participant bought unallocated ounces from. Okay? And now up here we have the custodian, okay? The custodian, it's HSBC New York. Now, I invite you to read the prospectus or just listen closely to what I'm about to say. At the custodian, the GLD trust has two accounts. And remember we talked about a bank account and $100 when I got started. They are accounts, okay? There is an unallocated account and there's an allocated account, okay? What I'm about to tell you is the essence of the GLD deceit, okay? They imply that they are holding gold. They are not. Well, they're holding unallocated gold, but they're not holding real bars, the bars you see in the pictures on the website and all this other nonsense. So what happens is I mentioned that the authorized participant buys the unallocated assets from the bullion bank. Then he submits them to the GLD, and they in turn give him a basket of shares, which this guy will then sell to the public or to his clients. And again, hopefully, for his sake, the price of gold is higher when he sells it to these folks than when he bought it from these folks. Okay, and so we have this piece of paper now up here that's got 100,000 ounces of unallocated gold. And that's what that piece of paper is. Well, so what they do, and this is how the prospectus reads, they deposit those ounces into their unallocated account at the custodian, okay? The custodian notices, he comes by, he walks by the unallocated account every day. He goes, oh, there's a new 100,000 ounces of unallocated gold in the GLD's unallocated account with us. Okay, so the custodian, who's got a big pile of gold over here, it might be his own, it might be bars that they have leased from a Western Central Bank. More on that. So they have some gold. What they do, the custodian will take out the 100,000 ounces of unallocated gold, that piece of paper that this guy got from these guys, and he takes it out, and then they put in the equivalent amount of physical bars that match the 10,000 ounces, 100,000 shares, 10,000 ounces of unallocated that we put in here. And so what is that, 250, 400 ounce bars, I think it is. So they would put that, and this is just an entry in their books, frankly, because an unallocated account, or sorry, this allocated account isn't a room, it's just an account like your bank account is. So the custodian comes along and they put in the 250, 400 ounce gold bars into this unallocated account, and they take out the unallocated ounces. And they go and do whatever, because they've got 100,000 ounces unallocated on this piece of paper. They could go back to the bullion bank and say, give us the money for this. And the bullion bank would. And so these bars that are put into the account of the GLD with the custodian, the unallocated account, now contains 250, 400 ounce gold bars. Just like the $100 we talked about at the outset. When you deposit something into an account, you no longer own it. You have lent it to that institution. And that is exactly what is going on here. Nowhere in the world, in the GLD prospectus, will you find the word title. Curious. Because the GLD trust never owns those bars. Ever. Ever. They are just deposited, and I found it curious that in the prospectus it says bars will be deposited into the allocated account. It never says that the trust will own these bars. Rather, it just says that they are deposited into this account. Okay? And so, if you're one of these people here owning the shares, what do you own? You know, when you own the share of a company, you You are a part owner of the actual company. What do you own here? You own shares of this trust, okay? And what does this trust own? This trust has an account with these guys. And in the account, after they deposit the unallocated ounces, and the custodian switches those into actual bars, these bars are in the trust's account at the custodian. But the trust doesn't own those bars. The custodian does. And where did the custodian get those bars? Well, it almost doesn't matter, but to make it all make sense, if the custodian had $60 billion worth of gold bars in their inventory, they could just put those bars into that account, I suppose. But I bet you the HSBC doesn't have $60 billion worth of gold in their inventory. So what do? They borrow them. They borrow bars from Western central banks, and because the Western central banks held these gold bars, and they could just let them sit there, or they could lease them out and earn some income on them, which they do. It's been a common practice for decades, even centuries, leasing of gold. So the Bank of Italy say would be happy to lend all those bars to the custodian. The custodian pays a very nominal fee, almost always less than 1% a year, to lease gold. They'll be happy to pay that so that they can then put those bars into the gold allocated account, and then they have everyone come around and take pictures of these bars and imply that the trust owns them. The trust does not own them. It never, ever owns these bars. All the trust ever owned was this unallocated gold that this guy bought from these guys, and he submitted to them to get a basket, which he then sold the shares to the public. So the GLD trust has this unallocated ounces, that's all it does, but then it deposits it in there. And it's got nothing. And it's got an IOU from the custodian. That's all that the trust has at that point, is an IOU. It doesn't even own the unallocated ounces. So, really, what is the GLD relying on? You've got to be concerned if, what if your investment you're considering, if it were to blow up, what would happen? Companies go bankrupt, and sometimes people lose all their money when they invest in companies. It doesn't happen all that often, but it does happen. What happens here? Well, let's see. Well, let's imagine that, let's say the custodian, let's say HSBC were to go down. Well, a few years ago we might have thought that banks, they're pretty solid, they don't go down very often, especially the big ones. Well, after 2008 we know a little better. Banks can go down, and if this one were to go down, how do you think that would affect this GLD trust? Because really, after they've submitted the unallocated ounces into the custodian, they don't own anything. All they have is an IOU from the custodian. And then they make the little switch over from unallocated to allocated, and well, the GLD still doesn't own those things. The Bank of Italy does, or some other bank. So if HSBC were to go down, the trust has just got to go, oh, you guys owe me 400 or 250 gold bars. It's like, no, we don't. We've never owed you that. We owe you some unallocated ounces that you deposited to us. And don't forget, when you deposit something to us, we own it. So you don't own those unallocated ounces, or you don't own those 250 gold bars. You own this IOU from us, and we're bankrupt. So that's what's going to happen. If this thing goes down, and you own GLD shares, you're screwed.